Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video we are looking at Microsoft. Microsoft is one of the companies that I've just reported in the last 2 days, and I think it was yesterday, and they have gone up a lot since. So what I want to do right now, as you can see, I'm up almost to 45%, right? So what I want to talk about today is just look at the latest earnings report, look at everything that they have reported, and then I'm going to tell you exactly where I stand and what I'm going to do with this stock moving forward. Because as you can see right now, okay, I'm up over £1,100. So what am I going to do? And it's not even one of my biggest yet. It's only 5% of my portfolio. I say only 5% because to be honest, actually at one point it was almost 10% of my overall portfolio. Is no longer the case. So I just want to go over some of the things that they have reported, give you my thoughts, and then we'll tell you exactly what I'm going to do with this stock. So obviously they had reported and they beat both top line, bottom line, and on that day they went up a list. I can't remember exactly, 7-8% at one point. Okay, so it's gone up quite a bit, and their guidelines was basically one of the things that have helped the company. So they reported that they are expecting from 54.85 billion to 55.85 billion in revenue. Okay, they also, so this is the quarter, basically the next one. Okay, and then they basically said they are expecting, and this basically is what was expected of them. So June, when they report that quarter, so Q4, they were expected, the basically analysts were expecting 55.41 to high end of 55.95. So they kind of bang on in the middle, if you like. Okay, and for that reason, because possibly a lot of these analysts were expecting maybe less or whatever, they have actually gone up that much. And obviously they beat both top line and bottom line, as well as obviously the expectations, basically what they're expecting to happen the next quarter. All this information, by the way, you can find it. This is public information. You can go to their website, find out all of that information. And this one, it might not be accessible to you, so you can pause the video and have a look at what the analysts are expecting in at least the next 3 quarters. Okay, but yeah, so that's one of the reasons that the stock went up so much. Now what I want to do is I want to go over the actual report, so what they have reported, and just to show you what basically this company sells. I'm sure a lot of you know exactly what they sell, but where is a lot of the revenue coming from? Where is it actually profitable? Are they losing some money, or where is that, and so on? So we're going to look at this table here, and as you can see here, each basically these are the basically each products that they sell. Okay, and as you can see here, the change in basically year to year. So this time last year when they reported, is it up? So the Microsoft Cloud revenue, is it up or down? It's actually up 22%. Now, if you take away the constant currency impact, which means basically if we ignore the currency fluctuations, whatever, which they come to be about 3%, the company should have at least 25%, okay, up from this time last year. So that's all it is. So we're comparing this time what the company has reported this time last year. Okay, so Microsoft Cloud revenue is actually gone up about 25%. The Office commercial package and cloud services has gone up 17%. Almost everything has gone up. Office, basically 365 commercial, is actually gone up about 18% or 14% if you ignore the impact, the currency impact. Now, even LinkedIn is actually bringing about 10%, which is actually quite good. Dynamic 365 is bringing 29%. Okay, server product and cloud services is actually bringing 21%. Okay. This is the one that people were expecting. So remember, this used to be about 40% and so on. It has come down quite a bit last quarter, but it's still 21% for sure, which is basically their main cloud services. Okay, now the one thing that was down is Windows. So basically this and this, both of them are kind of linked. Okay, so these are, we're talking about devices. When you buy a new device, obviously it comes with a new window. A lot of these HPs and so on, that is down because not many people are buying brand new laptops, okay, brand new PCs and so on, okay, personal computers. and the devices is the actual personal computers. So not many people are buying because of COVID, right? What did we do? We all bought 2-3 laptops. Are you going to buy another brand new laptop in a recession time? Okay, so for that reason, this is down and this is down. So those two are linked. So this is the actual Windows itself, the operating system that comes with those devices, and this is actually the actual devices itself. So Windows commercial product and cloud services is actually up about 18%. The Xbox is actually about up 5%. The search is up about 13%. Okay, and this is one of the things that I'm actually watching, and I said to you guys before, it's not going to be 1 quarter, 2 quarters. I'm going to watch it over maybe at least 1 year from now, just to see if there's a huge change in this. Because remember, we need to know the dollar amount that this company makes from this, then you should be able to find out exactly the percentage. But it's quite hard because this company does not report the dollar amount basically for that. Okay, but overall it doesn't even matter. The most important thing is that we look at the overall basically everything here, because remember, everything else is growing. There are things in basically the products and product lines and services this company provides that are growing so fast right now. So things like the cloud side of things, like things like this here, okay, the Dynamic 365 and so on, these are growing really fast. And obviously this company, hopefully with the Activision Blizzard deal going through, that's going to help the company massively. So this even basically the search, and why the reason I'm worried about, by the way, the search is because of the advertisement side of things, the fact that they're going to make a lot of money from advertisement. But that's not going to be a huge problem, and I don't think I will be worried about it anytime soon. And the reason I said that is because it's not like Meta and Google where every single penny comes from those advertisements. Look at this company. They have so many product lines. So this even should be less than 2-3% of the entire revenue of this business. Okay, so going forward, I'm not really concerned about it. And now I've said it before, but having looked at this overall report today, I'm actually convinced that this is not going to be, because of ChatGPT and all of the AI situation, I don't think that's going to change overnight. So that is just the breakdown. Now let's have a look at the actual revenue, is actual dollars of where some of these things come from. So what we're looking for right now is this. So we're comparing 2023 to 2022 still. So this time last year, the company made total revenue of 49.36 from 60. Okay, right now we're looking at about 52. So that has increased. So remember, what we're looking for is company that's making, basically increasing their revenue quarter after quarter, year after year. We don't want these things to decline all the time, and the company declines, the revenue declines year after year, then obviously that you're buying a value trap basically. So this is the kind of companies that you should own, right? Total cost of the revenue was only $16 billion, right, from 15. So it's gone up a little bit if you think about it. And then after you basically subtract the two, you'll end up gross margin of $36.729 billion, and that's up about $3 billion from last quarter, which is basically this time last year, which is absolutely fine. So they spent some money on research and development, which is absolutely fine in terms of sales and marketing, general and administrative. So obviously the company has to run. This is the overheads, okay? And after all of that, they end up with net income of obviously paying all the taxes and so on. They end up net income of $18 billion, 18.2 or $18.3 billion, which is actually quite a lot of money, right? And last quarter, basically this time last year, it was about $16 billion. So let's call it even $17 billion or whatever it was. Okay, so that's basically where we are in terms of the company, the money that the company has generated. Okay, the next thing I want to show you very quickly, there's a lot of information. This is really good. This is why you should learn about making sure you understand how to read these financial basically papers, because it really helps. Okay, it genuinely helps. So here we're looking at the net income that we've already seen, and then the company does a bit of financing. So they haven't made payment of some of the debt that they own, but this time last year they made about $4 billion. So they paid off $4 billion of their basically debt levels. Okay, common stock issued, okay, they have actually increased basically a little bit. And as you can see, common stock repurchases, not issued, sorry. So common stock repurchases here, repurchased is actually slightly declined from last year, but I understand the reason why. So this time last year, they bought $8.8 billion of their worth of their basically shares back. Okay, this time they only bought this much, and the reason they're doing that is, honestly, I think is because maybe the stock is a little bit overvalued. Because remember, you don't want the company to buy back their own shares when the shares are very expensive. You don't want that. Okay, and they obviously paid dividends as well. Okay, so the dividend, as you can see, is actually increasing. So I think it said on the top here, let's go back to the top somewhere here, it said the company has paid revenue in where is it again? Microsoft returned $9.7 billion to shareholders in the form of share repurchases, dividends in the third quarter of fiscal year 2023. So they're spending about $10 billion basically to actually pay us, either buy back their own shares or at the same time pay us dividends and increase that dividend as well. So now we have looked at what the company has said and what they've reported. We now need to see if this stock is actually a buy. Because remember, as investors, what we want to see is, yes, these numbers look good, but are we going to make money in the long run? Okay, is the company cheap right now? Can we actually buy it? And that's what we were going to do right now. According to the analysts, so a lot of them have reported, a lot of them have done some updates in the last 24 hours. So I'm going to show you right now basically what they're predicting and what they think of the company right now. And as you can see here, the company is basically absolutely huge company, okay, in the $2.2 trillion company, and is actually increasing by the second because it's gone up quite a bit. In terms of the 5-year total, basically 5-year returns, we're looking at about 228%, which is actually quite big. And that's probably why the PE of this company is actually so high, because of those amazing returns. It definitely has a wide economic moat. I don't think there's many companies out there better than this company, or can even compete with this company if you like. And beta is actually below 1, which is nice. Okay, the PE 33 right now. Okay, the sector we're looking about 30. Okay, so the forward PE is 31.62, and the average for this company for the last 5 years basically has been 31. So the forward PE is more or less in line with the 5-year average, which tells us it's possibly fairly valued right now, or maybe just undervalued. Price to free cash flow is looking about 39. Okay, so it's slightly higher. In terms of dividend side of things, obviously they just pay very small dividend. That's less than 1%. Latest increase was about 10%. 5-year growth rate 10% again. Annual payout, well, you get $2.72. Ex dividend 17th of May. So before, if you want to buy the company, a stock, whatever, you buy it before that ex dividend, and then you get paid for the following month. Dividend growth to 12 years, payout ratio 28%. So they have enough room to increase that dividend. And safety is 99%, obviously, because they have a lot of money. This money, free cash flow right now, I'm just ignoring that, because that's probably the money they're going to end up using to actually purchase this company, Activision Blizzard, if the deal goes through, which it should be. I mean, who cares about the UK? I don't think they should worry about what the UK is saying right now, because I think the US is probably the most important one for them, because both companies are US companies. But yeah, if the deal goes through, I think this money probably will start disappearing. But the free cash flow yield right now, we're looking at about 2.5. Okay, now in terms of profit side of things, this company is absolutely amazing, profitable. In terms of total return, the last 10 years, we're looking at about 26%, and then revenue compounding annual growth rate in the last 5 years, we're looking at about 15%, and current ratio is way above 1. So they got enough money to cover their current liabilities. Growth estimates for next year, basically, and this is going to change, because as a lot of analysts have now started increasing their expectations for this company, because of the fact that the company has come out and said we will do better than we actually better than you think. So they probably will start changing this. But 13% growth this year, 12% after that, every year for the next 5 years, which is actually quite nice. I mean, if that's beating the S&P 500. So if the S&P 500 is growing 8% whatever, and the stock that you own is actually growing about 12%, that's absolutely amazing. Current price is actually $306. But according to Simply Wall Street, they disagree completely, and they are saying obviously it's very much overvalued. 40% they expect the price to be $217. I don't think you will ever see that. I've waited for that for years now, and I haven't seen that opportunity, so I don't think that's going to happen. fair valued according for the fair price for simply Morningstar is 325. That's about 6% discount right now. It's more or less the same when it comes to TipRank as well as Seeking Alpha. I was quite surprised. So these three more or less kind of agree, and according to Seeking Alpha, it's actually a buy. So I do think the company is right now fairly valued. I don't think it is way undervalued or anything like that. Okay, if it comes back down again before this massive jump, it will be really good, basically addition to a new portfolio and so on. But it is definitely a buy. Now this is the only reason this information comes from Zoya, and this I've always said I do disagree because of the amount of basically products this company sells that we've already seen. What we're looking at here, okay, that 10% off overall entire basically cannot be more than 5%. I don't believe that. Okay, it will be nicer to find out the dollar amount that they used and so on and exactly give us overview, but I don't think for that reason they just put it questionable. Again, Meta is questionable, the Google is also, or Alphabet is actually questionable and so on. But I think this overall, to me, it makes no sense. Okay, I'm just gonna, for now, I'm gonna make my decisions based on the information that I have from the company and not use Zoya at all for this one. Now, when it comes to shares outstanding, it's declining. It has been declining for the last 10 years. They have been buying back their own shares. They're proud of that, and which is absolutely fine. As long as they're buying it back when the shares are not overvalued, I'm very, very happy with that. So what is my plans then? Okay, we've talked about a lot about Microsoft today. So what is the plan going forward? So I do own only 15.1 shares of this company. I actually trimmed it not long ago. I've considered, I've looked in, maybe I was thinking about it, maybe trimming it a little bit, but I think I'm just gonna let it be. Okay, for now, I don't think I want to add it in anytime soon, or maybe it's rushing to adding, because there are other companies that I own in my portfolio that are, this company, at least I have it like 5% of my overall portfolio, which is absolutely fine. And the fact that I'm actually up about 44%, at the moment, I'm not really too concerned about that. If it comes down, I would love to buy more of this company. So this, for me, is one of the companies that I would love to have in my portfolio for at least the next 10 years, minimum 10 years, okay? If not even longer than that, inshallah, if I'm still alive. So that's the plan, inshallah. I'm not gonna buy right now, rush buying it straight away, because it's gone up quite a bit. My average is only $220. Can you imagine? $220 right now is basically $80 more than what I've actually paid, more than that. Okay, so I don't want to actually add to it and basically average up when I do own companies like, for example, ASML, for example, has gone down a bit. So I'd rather buy more ASML or other technology companies that I have. I'd rather buy more Adobe and so on than actually add to Microsoft right now. So it's a great company. I love the company. Like I've always said to you guys, J&J and Microsoft have always been my favorite, basically, companies that I own in my portfolio. Recently, I was a little bit hesitant about that revenue and whatever, but looking at the ChatGPT and basically what it's done so far, it's not going to be overnight thing. And the fact that the Bing is now basically got a bit of an AI, that's definitely going to help their revenue, that side of things. But then everything else is growing. Okay, so I think it's going to stay under that 5%, below that 5%. But if it ever goes above that, subhanAllah, I'm not going to fight and I'm going to obviously leave it alone. As you can see, the portfolio has gone up against above 70. It's gone down in the last half an hour or so, because it was probably the market is just open. But yeah, there you have it. There is it was this morning, I think it was 300 something. There we go. It was almost to 400, 70,400, whatever. But yeah, that's it. I'm not gonna buy anything today. I think I've been paid some dividends, so I'm gonna reinvest that today. But next week, inshallah, I will be doing a lot more videos. I will be a lot more engaging with a lot with you guys, inshallah, going forward. Have a wonderful day. Assalamu Alaikum.